Hello everybody, this is Mel, the Scientia trader here, and today is going to be part 3 of the 90,000 project. Part 3 is actually entitled Reflect, Recover and Restart. It's quite an aptly named title based on what's been happening over the last few months. Just to set the context clear, the 90,000 project was a project I kicked off at the beginning of March. It was primarily to show how, through a systematic probabilistic approach to sports trading, one could increase a bank from £15,000 to over £100,000 within a matter of 4 to 5 months. I think the intended target was that by starting in March, hopefully by September, I could have increased a bank from 15 to over £100,000. And show how, through the method of compounding and a sort of percentage-based risk approach, one could really radically grow their bank, providing the discipline is there and that the market conditions are favourable to the trading approach. So what I wanted to do today was really just talk about what's been happening since March, because obviously at the end of March I stopped updating results. And it was only sort of in the last week or so that I've sort of come back onto the scene. And I've received numerous emails, people asking if everything's okay and what's happening with the project. And so what I wanted to do today was really just give an inside leg measurement as to what happened and why there was a need to reflect, recover and restart. So hopefully this will give you some insights as to what's happening and as of over the weekend, where I'm heading over the next few months. So let's sort of motor along. So for March 2019, the primary statistic was that it was a completely garbage month. I think overall my P&L throughout the month was I think it was £472.35 loss for the month. Now I don't normally have many losing months, but March was really quite a conundrum. One of the reasons why March was quite abysmal was, well, before I even talk about why March was abysmal, one of the things that you might want to remember from part 1 of the 90,000 project, the very first podcast, which is part 1 regarding the 90,000 project. One of the things that you may remember me saying was that I had made a decision to simply focus on Betfair, whereas previously I had been, in terms of my trading portfolio, looking at opportunities not only on Betfair but also Bet365. Now, as we all know, Bet365 isn't an exchange. They're actually a bookmaker, well, one of the largest, if not one of the largest bookmaker in the world as far as sports is concerned. And I also used Bet365 because one of the things that I couldn't stand about Betfair was the fact that some or many of the leagues that I wanted to sort of take part in, Betfair never ever seemed to sort of cover them in play, and a lot of what I do is in play. So I was kind of forced to look to alternatives, and Bet365 was obviously a key alternative because of the fact that they have probably the largest sportsbook in the world in terms of their coverage of football across the world. And so a lot of the leagues which I really like and which are quite favourable to how I trade, Bet365 had them. So what that meant was that over the years, Bet365 was quite a sort of key component of my portfolio. However, when I started this project, I made a decision to just focus on Betfair because I just felt that if I am going to provide transparent reporting on my results, that I just felt it would make better sense just to concentrate on one platform, because rather than sort of chopping and changing and adding different reporting from different interfaces. If I just concentrated on Betfair alone, then it would probably make things a lot easier for people to follow in terms of the results, because you're always looking at the same kind of layout and same design. And also the Bet365 reporting interface in terms of, looking at trades that you've made for a particular day. It's not as nice as Betfair. And so I made a decision, okay, let's just focus on Betfair. However, that quickly, for me, materialized into something which I realized I couldn't really continue, and was part of the parcel why March was quite a difficult month. March was also a difficult month because, compounded not only by the fact that I'm excluding Bet365, was also the fact that it was internationals, and I hate international weeks, because obviously with international weeks it just means that many of the leagues shut down, and so the availability of trades that I would normally take is obviously significantly reduced. However, what was still quite apparent throughout this time was that there were still a lot of lower leagues and a lot of exotic leagues across the world which were still in flow during the course of March. And because I'd made a decision not to use Bet365, the frustration built up continually through the month as I watched potential trading opportunities simply come and go, because I decided that I was going to just focus on Betfair anyway. And what tends to happen in international weeks, as you all know, is that normally it's sort of like the top tier leagues of each country that will normally shut down. So, if we take the UK, England as an example, you'll find that the Premiership and then, the next 2 or 3 leagues below that are shut down. But you probably still find that the lower tier leagues, like, the National League and, the Southern Premier League, the Northern Premier League, and possibly even Division 3. Can't remember off the top of my head. But you'll find that this pattern is repeated across many leagues in the world, where it's normally the Premier leagues that are sort of shut for the period of the internationals. And the internationals is normally sort of 10 to 14 days, which can be pretty much a big portion of the month. So this was very, very sort of frustrating. Now, it's not like it hasn't happened before. I mean, there's been nearly all previous internationals, international kind of week or 2 week periods which take place throughout the year, have always been a bone of contention with me, and probably a bone of contention with you as well, because obviously it's difficult trading internationals because the stats isn't that significant. And you've also got to take into account, the fact that with some internationals, if it's just friendlies, sometimes the results are a bit bizarre and may not reflect the true, the true history behind how that team actually plays, etc. So March was quite a difficult pill to swallow, but it was something which occurred to me, which was that the exclusion of Bet365, am I actually cutting off my nose to spite my face? Because I was well aware that once we kind of hit the end of May, going into June and July, am I going to be faced again with a situation where I'm sort of struggling to find trades because of the fact that Betfair coverage, especially when it comes to the summertime, can sometimes be a bit sort of hit and miss. Now, one of the reasons that I kind of had put my faith in Betfair in terms of believing that it would be fine just to depend on Betfair alone was because my client, my sort of relationship manager, I've got a relationship manager at Betfair, and they had told me that Betfair was making a sort of concerted effort to increase their coverage of some of the leagues that they haven't really covered consistently before. So as an example, what you might have found was that whereas Betfair would normally cover, I don't know, if we take Norway as an example, they will normally cover Norway Division 1 and Norway Division 2. But when it comes to Norway Division 3 or Norway Division 4, or even if we take Finland as an example, with Finland, they would normally cover, and when I say cover, what I'm talking about, the context here is in play. So I'm not talking about where they cover games and then when it goes in play, it can be, it kind of just shuts down. So with Finland, again, Finland's another prime example. They'll cover Division 1 and Division 2, but then when it gets to Division 3, the Kakkonen League or the Kolomen League in Division 4, what you would historically find is that those games are just never in play. And again with Sweden, Sweden Division 1 and Division 2 is normally covered, but Sweden Division 3 and Division 4 is normally off the books. And the reason why that's sort of quite important for me is because of the fact that Sweden Division 3, Division 4, Finland Division 3, Division 4, and Norway Division 3, Division 4. There's a lot of teams in those leagues. So it basically means that you're kind of missing out on a significant number of games if you're just depending on Betfair alone. And then with Betfair, you also have situations where even some of the more established leagues, so let's say the Chinese Premier League and Chinese Premier League, or the top tier leagues of Asia, like Malaysia, China, Hong Kong, Thailand, even sometimes within those leagues, Betfair's coverage is just so inconsistent. I mean, sometimes you'll be sort of going into Betfair looking to trade on games in the Thai League and the Chinese Super League, and then find out that when it's actually not in play, and you're just thinking to yourself, for Christ's sake, what is wrong with this platform that it just has such an inconsistent approach to more exotic leagues? Yes, if we're talking about Germany or Spain, Italy, or the UK or Portugal, the sort of established leagues, and Betfair is very strong. But I don't want to be a trader where when it comes to the end of May, I'm kind of having to look at things like tennis because of the fact that I'm not able to find any more games, even though there's plenty of games going on. I mean, during the course of May, June, July, there are still so many leagues that are operating, like Vietnam, USA, South American leagues, leagues across the Asia Pacific continent, obviously the Nordic leagues. There's still a significant number of football going on. Football's a global sport, and it's a 12-month sport. So I want to have a strategy that approaches it as a 12-month sport rather than a seasonal sport where when it comes to the end of April, I'm scratching my head and banging my toes on the floor because I kind of think that I've got to wait another 3 months till the established leagues kick in again. So that's why I said, is this a pattern? Is this a pattern or sign of a bigger issue? And so the conclusion I came to when it got to the end of March, I realized that what I needed to do was incorporate Bet365 back into my trading routine. I can't depend on Betfair alone. Betfair's great. I'm not knocking Betfair in terms of the fact that it does cover a lot per se, but I just felt that in order to really give myself the best chance of achieving my goal, and also my my trading strategy is very much built on being able to trade a minimum number of games per day, and so I need to give myself always the best chance of achieving that, even if it means that I've got to be looking at different platforms. There are other platforms, other sort of exchange like BetDAQ and Matchbook, but they're just simply minions of Betfair. I mean, Matchbook is just a complete waste of time in terms of its coverage, and the same with BetDAQ. They're just minions of Betfair. There's no sort of advantage they offer in terms of games coverage. So for me, Bet365 was what I realized was where I needed to be looking again. So if it's a case that there's particular games that meet my so when I do my pre-stats analysis of potential matches, if those matches are not in play on Betfair, then what my next mode of action would be to look at Bet365 to see if they're on Bet365. Now, the question then becomes, well, what about the fact that with Bet365, their pricing isn't as competitive as Betfair? And that's quite an important, that's an important sort of observation or consideration, and I could never dispute that Bet365, their pricing sometimes can be quite horrible in respects to how I trade. So this then presents another conundrum. But how I've managed to sort of get around that is with Bet3, the type of trading I do, it's trading which is pretty much based on going in when price is starting to move very quickly because of the fact that time is running out. And so what you generally find with price movements is that when a particular market, when time starts running out on that particular market, for that market to achieve what people originally thought it was going to achieve, then the price starts to react quite considerably. So for example, if you initially believed that there's going to be a goal in the game, what you tend to find is that say like at 60 minutes the score is 2-0, and it gets to 80 minutes. Once you sort of hit that 80-minute plateau, and then 85 minutes and 88 and 90 minutes, then if you're looking at a graph, what you'll generally see is that there's an exponential acceleration of price. So if you're back in, you'll start to see the price start to move quite quickly as the match approaches expiration. And so even if you've got a sportsbook like Bet365, who are normally quite not great in terms of their pricing, what will eventually happen over time during the course of a particular market cycle is that the price will just eventually fall in line with Betfair anyway, because of the fact that price is actually influenced by people, and so ultimately over time what happens is that the price then comes in alignment with where it should be. So you've got to really kind of determine at what point you get in, which is going to be most effective for you as far as hitting a win rate that aligns with your reward to risk ratio that you're looking at, in order for it to create a positive expectancy. And that's something I'm not going to really go into much detail now, because I've talked about that in previous webinars. So with Bet365, through years of dealing with them, I've kind of found what that sweet spot is for myself in terms of the way that I trade. And so for me, it's just a matter of aligning myself with where it's best to jump in, rather than taking really bad prices and complaining about it. Well, there's nothing to complain. I already know the nature of Bet365, so I've got to kind of jump on it when it's best for me and suits my agenda. And so that's why I can still work with Bet365, because once you've got a win rate and then a reward to risk ratio that is in alignment, then it's almost like a magic ingredient, and so that and there's going to be times where sometimes the price is just so bad that you just can't get into it anyway, because it's just forget it. So, but I would say for the majority of time, I would say probably 90% of the time, most trading opportunities, when they present themselves to me on 365, I can take it. And if I believe that it's still not competitive enough, then I've kind of learnt to discipline myself not to take it if I don't feel I should take it. So Bet365 is still king as far as I'm concerned. Now, obviously, you know, one might say, well, why don't you just focus on Bet365 per se? But that's, again, because with Betfair you can get better pricing, and I'm only using Bet365 really as an add-on to fill in the pieces of the puzzle that Betfair can't. And also the great thing about Betfair as well is that with Betfair you can back and lay. With obviously with Bet365 you can't do that, and so it just means that there's less. With Betfair I've got, you know, additional strategies in the portfolio that can only work on Betfair because of the fact on Betfair you can back and lay and, you know, buy and sell, whereas with Bet365, you know, to remain in a game, you know, it's really more about sort of backing. You can only back, you can't really lay. Now, so it was so when it came to the end of March, I'd sort of said, okay, I've got to incorporate Bet365. But then I realised that I'm going to be faced with another sort of conundrum, and what that conundrum is if you may remember looking at the simulations that I did in part 1 of a 90,000 project, and I think even in part 2, one of the things that you will have seen is that as the weeks go by, naturally the P&L will start to increase quite significantly, because again we're basing everything on a percentage-based risk approach. So, you know, if it's 1% of your bank, it just means that as your bank grows, so whatever profits you make goes back into your bank, and as your bank grows, it just means that your liabilities are going to grow, but your profit potential is going to grow as well. So one of the other things I was faced with as an issue and a challenge, and the challenge has always been there, but I realized it was going to be even more of a challenge now that I wasn't just dealing with fixed risk, that my risk approach will increase based on my bank size. One of the things I've obviously was aware of is that when you're dealing with UK bookmakers, you have the potential of having your account limited if they sense that you know, your account is growing too much, and if they sense that all of a sudden you're starting to really take money back from them. So again, I'm presuming most people listening understand the difference between an exchange and a bookmaker. And so, you know, with Betfair or Matchbook or Betdac, when you put on money into the market, what's happening is that if your trades get taken, it's because it's been taken by somebody else, another person on the other side of the market who has a different opinion to you as to what's going to happen in the market. But with 365, when you put the money on, if you win, you're actually winning from the bookmaker. So because of that, you can obviously understand from their perspective when they're balancing their books, if they start to see somebody that's significantly generating revenue week in, week out, you can sense how that's going to be a danger to them in terms of their income potential. So what generally happens is that you eventually get limited, and it's in their terms and conditions that, you know, they can do what they want. And so essentially I realize that, you know, if they do limit me, it's going to really kind of negatively impact the project, because it's basically going to mean that I can't continue to grow consistently, because all of a sudden, whilst with Betfair I'm still able to grow my account based on my bank size. With 365 I would be limited, and sometimes what they do, they don't limit you to where they stop you at in terms of your liabilities, they actually drag you down. So you may find that, you know, at the point that they actually limited you, you were probably using liabilities of, I don't know, £300, £400, and what they do is limit you back down to like £50 as your max liability. So I knew that it wasn't that wasn't going to be a workable approach, and I kind of realized that rather than just continuing and then when it happens it's like, oh my god, the ceiling's coming down, what do I do? It was prudent for me to try and see if there was another solution out there which could help to remedy the situation when that happens, because it will happen. There's no doubt about it, it will happen. But really knowing that if it does happen, that I've got a contingency in place, a seamless one, which means that the project continues seamlessly and full steam ahead without any sort of banana skins to kind of stop the momentum and then cause a delay in due process. So the question obviously was, well, where do I go next? Because it's kind of like jumping from the frying pan into the fire. So I'm going back to Bet365, but then I know that my days are limited with them anyway. So during this period of time, in fact, since last year, I was actually in communication with one of the guys who's subscribed to me on Twitter. Really lovely guy. We've been in discussions for many months, and he had sort of told me, this was sometime last year, he sort of told me about the fact that you've got Asian bookmakers. And to tell you the truth, last year I'd heard about Asian bookmakers, but I didn't really know too much about them, because my sort of introduction into the whole realm of sports trading, it wasn't because I was a gambler or anything, so I was familiar with who the bookies were. It was really just, there was a sports trading course, I saw it as an opportunity to make money, and that was my whole introduction to Betfair. So I wasn't really familiar with bookmakers, who the bookmakers are, and over rounds and all kinds of sort of terminology that is normally associated with people that are quite well into sort of punting and gambling. But in any case, once I started to understand more about who the Asian bookmakers are, it then became apparent to me through some of the things that he had told me, as well as sort of additional research that I had done, was that therein laid the opportunity to probably have the solution that I need to fill in the remaining pieces of the jigsaw. And so when I looked into Asian bookmakers, it was quite interesting, because I became aware that there were particular bookmakers that actually don't have an issue with professional traders. They don't have an issue if you're somebody that has a historical record of generating profit, significant profit. They don't tend to have issues if you're placing very large liabilities down, and they are the complete opposite to the likes of Bet365. And it was quite an interesting understanding of the development of bookmaking, especially over the last sort of 3 to 4 years. And obviously one of the things that really changed the landscape was when new laws that came down from government in the UK, in terms of the way that they were taxing these companies, led to a mass exodus of bookmakers from the UK. And I think obviously a lot of these bookmakers realised that there were much bigger opportunities, especially on the Asian continent, because you've got to sort of take into consideration that when you're talking about places like Thailand, Malaysia, India, Sri Lanka, Hong Kong, Japan, China, Thailand, you're dealing with countries with huge populations, huge populations. And so what I was led to understand, and I'm sort of by no all means an expert on this, so when I'm talking about it, I am sort of telling you in terms of layman's perspective, my understanding is that the way that they structure their business in those continents is it's volume driven. And so what it essentially means is because they have literally millions and millions of account holders, and because there's literally so much flowing through their books, there's more than enough for them to take on accounts of people that might be more savvy in terms of being professional traders as opposed to the sort of typical punter. And so because of that, that's led to their rules and regulations being a lot more cohesive for people that like myself and others that generally need platforms that are friendly to those that are looking to generate significant revenue. And so that's just the total opposite to Bet365, where their model is completely different. And so because of the way they operate, it's not volume driven as much as the Asian bookmakers, and so they're a lot more penny pinching in terms of their attitude when they spot that there's particular accounts that may be showing a sharp contrast to the majority of people that are constantly losing. And so this was quite interesting for me. Now, and so what happened was during the course of April, I then went on sort of like a fact-finding mission. So that's why I kind of brought the 90,000 project to a halt, because what I wanted to do was really kind of understand, well, in terms of the way forward, what is the best approach? Because there's different Asian bookmakers. I'm relatively new in terms of my understanding, so I'm vulnerable to being ripped off by people claiming that they can actually get me access or set up accounts. And I mean, it's a whole new ball game for me. And so I decided to do some due diligence on these companies. And obviously I'd heard of Pinnacle. Pinnacle are massive, just like Bet365. And then there's others like SBO Bet and SingBet and BetISN. And then in terms of the research, I then understood that that a lot of these companies will not take on business from the UK because of the fact they left the UK due to tax reasons. A lot of them obviously feel that if they take on UK clients, even though they're at arm's distance now, they're operating and domiciled in jurisdictions that the UK government can't reach, they still sort of don't want to risk the wrath of the government. And so a lot of these companies, what they've decided to do was basically block UK residents. So that presented another issue for me, as I was like, okay, if they block me as a UK resident, and sometimes it wasn't even clear, but it was like, if I'm blocked as a UK resident, then there's no chance. Then through my research, I understood that there are what they call Asian brokers. So these are organizations that sit as a hub between the Asian bookmaker and the person that wants to set up an account. So that kind of gave me hope, because I was kind of thinking, well, I'm presuming that what these brokers do is provide the ability for UK residents to actually get involved, because now the UK residents are not dealing directly with the Asian bookmaker, they're going for a broker. And so essentially the way I kind of understood it was that the broker has aggregated accounts with the bookmaker. So the bookmaker is not going to know or have any inclination of where the origin of funds is, that it's coming from the UK, because essentially what the broker does is put up their own money on the Asian bookmakers platforms, and then basically they kind of do a money management flow approach, so that as the money comes in from, say, myself into the broker, if I want to place a trade, the broker will place an equivalent trade using their money on the Asian bookmaking site, and they kind of manage the books that way. So that's how brokers operate. And that was fine. And then when I applied to be with the brokers to set up an account, I was then hit with another issue in the sense that a lot of these brokers still don't take on business from the UK, and so it was starting to become quite frustrating, because I just felt that every alley I was going down, every road I was going down, every right turn, every left turn, I was still coming up with the same blockade. But in the end, I managed to resolve it, and how I managed to resolve it is, for some reason, my brain hadn't triggered the fact that I'm actually I've got dual citizenship in a different country, and a country that they accept residents from. And it was funny how that just wasn't an even part of the equation until I literally was kind of like chewing through my fingernails trying to find out what way can I actually overcome situations. So the bottom line is that I've managed to set up an account now with a particular broker, and that's the other thing as well. Not all brokers are equal, and not all of them are of good report. So you've really got to do your due diligence and stick with the ones that have been around the longest period of time, and not ones where they're relatively new and they've got some really crazy terms and conditions about how you can withdraw funds down. You've really got to do your due diligence, but there are good ones out there that are established, and if you do your research, you'll find them. Now, one of the things that I really liked about the broker platforms is some of them were incorporating a trading platform called Molybet. And Molybet was actually built as a sort of trade execution platform for professional sports traders. And one of the things I liked about it was how it was quite a number of key features I liked. Number one, it kind of reminded me of BetAngel, because BetAngel is what I use for my trading on Betfair. I know there's others like Geeks Toy, and there's other sort of ancillary ones that you can use, but for me, BetAngel, Peter Webb's BetAngel for me is really what I've always used and will continue to use. But certainly in terms of using the Asian bookmaking or leveraging off Asian bookmaking, some of the brokers actually use Molybet. Now Molybet, some of them have actually white labeled it now, but the sort of underlining structure is what is called Molybet. And what you can see, which is quite interesting, is that when you're looking to go into a particular trade, what it will actually show you is the prices that are being offered by all of the companies that the broker's linked into. So the point of a broker is basically to act as a hub and give you access to the pricing from different companies. So they're not just affiliated with one company, they're affiliated with many companies. And the advantage that gives you is that when you're looking to place your trade, you can actually see what price is going to be the most competitive one to go with. And that's quite a useful and advantageous function to have, in the sense that you're looking at across a whole array of pricing, and you can pick which price is going to be the best one for you to go with. Now, these particular bookies that you see here are sort of acronyms that they use. So they can still link into Betfair, they can still link into Matchbook, but then they also link into Pinnacle, SBO. There would be no need for me to use Betfair through this trading platform, because I've already got access to Betfair anyway through BetAngel. But certainly some of the other ones that they use. And so for me, I just thought this is absolutely fantastic, because it kind of mirrors as closely as possible what I would be used to seeing in terms of Betfair through BetAngel. So I do my trades through BetAngel. I don't go to Betfair directly because that's typically what a normal punter will do. But when you're using BetAngel, you're able to see a lot more things like sort of full market depth, and there's a lot more things that you can do through trading software as opposed to try and deal with Betfair directly. And so one of the things I'm always looking at is what the trading platform and the advantage it gives you in terms of how it operates. So Molybet is basically the underlying feature behind this. And what's really good about it as well is that when you're looking to get into the market, it will actually tell you, so here it will tell you a lot of sort of key snippets of information, like it will tell you what is the maximum amount you can put into the market, which is always relatively high. I mean, obviously with Betfair, what you put into the market is going to be dependent, in terms of it being taken, it's going to be dependent on who's on the other side, who's going to match it. But certainly within the Molybet platform, it shows you, the maximum amounts you can put into the market. It shows you what the best offers are. The only disadvantage that I've experienced with the Molybet platform is the fact that whereas with with Bet365, I'm used to, when I put an order into the market, I'm used to it being processed within 2 to 3 seconds. I mean, Bet365 is just streets ahead in terms of their processing of entries into the market. Betfair, you're talking anything from 4 seconds to 10 seconds. But with the Molybet platform, what I've experienced is that sometimes it can take up to a minute for an order to actually be taken. Now, a lot of that's going to be, due to APIs and the fact that how it's structured with each of the providers or the bookies. So I've had to you have to make an adjustment. So if you're operating in a market that's very time sensitive, you've just got to be aware of that and possibly make adjustments into how you position yourself, or when you position yourself, to sort of bear that in mind, or else it can really be frustrating. So you sort of have to manage your expectations of, okay, this is what you're dealing with, and how does it impact your overall performance as far as your reward to risk and your win rate. So that's really the only snag. But other than that, I'm absolutely delighted with the function of the platform, and and it also has a number of output graphical displays which help you to get a sense of what's happening in terms of how with the different bookmakers price is evolving over time. So again, it's just a very, very useful tool. And the only downside obviously is the time taken for orders to be processed. And then the only other downside again is you may really struggle if you're a UK resident only, and there's no other way of being able to get approved. And obviously they do their due diligence. They'll check your proof of ID, they'll check proof of address, and stuff like that. So if you haven't got that, then I think there's one or two brokers which may take on UK residents, but they don't have. I think the Molybet platform, for some reason, the Molybet platform is only there's quite strict, I believe, strict criteria for which people get access to it from which countries. So the one or two brokers that may take on UK residents, you have to use their own sort of proprietary platform, which I've looked at some of them and it's kind of a bit So, but any case, so this is where I am. So this whole experience it took me about a month and a half. Was it a month and a half? Probably about 5-6 weeks. The whole process of the start of the research through to actually getting up and live. And essentially what this means now is that I was then happy to sort of kick off again when I moved into June, because now I'm no longer kind of trading with apprehension that as soon as I really start to scale up, that if 365 sort of limit me, that everything sort of comes to a crashing halt. I've now got contingency in place that I can immediately move and transition over to something which is obviously catered for people that actually are professional traders, professional sports bettors, value bettors, etc. So that's basically the explanation of why in April and May. And what happened in April and May is, while I was going through this process of education for myself, I was also, during this period of time, just retesting and fine-tuning particular aspects of my approach as far as trading's concerned. There were some other people whose ideas I was looking at in terms of particular filters that they were using and trying to see if it could work. But ultimately, coming back into June and moving into June, I've realized that what I have is a very powerful way of generating revenue. And one of the other things I just wanted to add as well, while I think about it, is if you are sort of going through your journey of trading development, one of the things I would really, really admonish you to remember to do is keep very, very good notes about the rules that you've developed for systems that you're working on. Because what will normally happen is that you may decide that system, for whatever reason, you move to a new system or you upgrade. And if you're not keeping a good track record or some sort of traceability matrix of rules and filters and reasons why you've come up with those rules, what can happen is, 1 year down the line, 2 years down the line, 3 years down the line, you may have gone through this whole process and realize that actually the best method or the best strategy that you ever had was the one that you had 2 years ago, 3 years ago. But then when you go back to it, all you see are the results. You can't really remember what the decision making was behind some of the rules or what the rules were, and it can become a real nightmare for you, because it's almost like you're sitting on a treasure chest of gold, but you don't have the key to open it up. And that's something that I've discovered along the way, is the importance of keeping real accurate notes of every step of trading development, so that you never lose sight of where you're coming from. Okay, so that kind of explains what's happened over April and May. So I saw somebody send a tweet as, did I blow the bank? Far from it. In fact, my bank's gone down a little bit because I've had to take some stuff out, because obviously trading in April and May, I was kind of just fine tuning, and so I said, okay, let me just use, whilst I get things moving with the Asian bookmaking solution, let me do a bit of fine tuning in terms of my approach for the 90,000 project, just to see, and so there were some changes I've made which I'm going to talk about. Okay, one of the questions that's come back to me is, what's the motivation for doing this in terms of showing my results? And one of the motivations I had was really something which I haven't sort of talked about before, but it's related to, some of you may have heard the name Adam Heathcote. Adam Heathcote was a young guy who, I believe it was in 2008, went on a horse racing trading course with Peter Webb's Horse Racing Mastery or something like that. And when he actually then embarked on trading, he really had some phenomenal success. And just like myself, what he decided to do was create a diary or a blog, documenting his journey day by day. And essentially what you saw over a period of a year or year and a half was how he had actually journeyed from starting at ground zero to making some spectacular income on a daily and a monthly basis. And I remember coming across his blog last year, and it was really, really, how can I say it? It was really, really infusing. I found it infusing for myself. I also found that it was very motivating for me, because I could clearly see that, just like myself, he was somebody that realized that sky was the limit, and he was going to actually prove people wrong and prove to himself that he was capable of generating significant revenue. And I think he started a project which was called 0 to 350,000, where he was trying to show how within the space of, I don't know if it was a year or 2 years, how he could grow an account from £6,000 up to 350,000. And I mean, his results were incredible. I mean, what I've done, I mean, some of his focus was horse racing. And so, you know, for instance, if we look at, you know, February 2009, you know, on one particular day, £791, on another day, £1,000. And then as he started to increase his bank size, you know, in August, on the 4th of August, he actually made £25,000. Yeah, what was quite interesting was really seeing the growth of his account. And I think he documented it in his blog. Just trying to find, he did document in his blog. I mean, where are we? Just one moment. Yeah, so in his blog, September 2009, I believe, here we are, on Friday the 4th of September, it was quite interesting because he actually had documented how things had grown over the course of the months that he was working on this project. And it's quite interesting because you can actually see on a month-by-month basis how much his account was growing by. So in the initial stages, you know, just under £1,000, then 2,000, and then sort of around 7,000, and then jumps to 13 in July. September, December, you know, it starts getting to £20,000 a month range, and then he hit a period of a number of months where he was sort of hitting 40,000 a month, 30,000 a month, and then it went down slightly again. And I just found it really kind of entertaining reading his story and reading his journey, and really trying to sort of extract useful nuggets of information in terms of his mindset. How did he cope with scaling up, and the psychological triggers that are embedded within us, which can really kind of ruin the way that we're supposed to do things. Yeah, I just found it very inspirational. And unfortunately, the blog's taken off, but I was able to get access to it using the Wayback Machine. But yeah, this has been a sort of motivation for me, because at the end of the day, I just found that the expectations put forward by other people that I've come into contact with who sell systems or who provide advice about sports trading, it was very constrained and very kind of Scrooge-like in terms of what they believe your expectation should be in terms of how much, you know, you can earn from it as a living. And I can understand clearly that a lot of that is probably because of caution, because in the past there's people that have promised the earth and not delivered. But where I was coming from, it was almost as if, well, I can't really allow what's happened in the past to dictate where I'm going in the future. And furthermore, the mathematical component is the legitimate evidence of what can happen. Now, allied to the mathematical component is another important component, which is discipline and psychology. And as humans, we are emotional people that bring all of our garbage and all of our issues and issues going on in our personal life, and all of our personality flaws and vulnerabilities, we bring it all into our trading. And that's what then makes or that's what skews the maths that should work. And so, a big part of the last year for me is really working on my mind and working on myself and my self-discipline, because I used to really underestimate psychology. I used to think it was all about just finding a method that makes a lot of money and regurgitating that methodology week in, week out, and it just doesn't work like that. And it's something I'm going to talk about in a little while as well. One of the other questions that comes is, why don't I reveal my edge? And so from time to time, there's going to be people saying, oh, why don't you just show your So in terms of how I show my results now, all I'm showing is really just my income, my P&L result for the day. I'm not actually going to show the individual trades. I'm just going to show the P&L, whatever platform I'm working on. I'm going to show what that P&L is. Now the question is, why don't I reveal my edge? And sometimes I really struggle with the mentality of somebody who would ask a question like that. It's like going up to, I don't know, it's like going up to somebody who's an expert in their field, or somebody that is very successful in what they're doing, and saying to them, please, could you just give me all the secrets of what you do for free? And expecting them to then spend all of their time doing that. I just don't understand why. I just don't understand the mentality of people's expectations sometimes. And the reason I say that is because I was mentored a bit a couple of years ago by a particular trader who was very successful, and it was quite interesting because at never any point during our communications did I ever say to him, please could you tell me the secrets of what you do in terms of the trades you take, and if it was something that he was going to offer, then I wouldn't be a fool and say I'm not going to take it. But it was never my intention that he was ever going to give it to me. And to tell you the truth, what was quite helpful was the fact that we were operating in different markets. I mean, I was operating in sports market, he was operating in Forex. So whatever he taught me was more principles as opposed to the methodology of how he traded. And I think probably that was very helpful. And it also, I believe, created a very healthy dynamic, because he didn't have to wonder, is the intention of Mel that he's trying to sort of suss out what I do, because I was operating in a completely different market to him. And so it created a very healthy dynamic and a very healthy relationship, because it was all about principles. It wasn't about methodology. It was about principles. And so one of the things he said to me was, the quickest way to lose your edge is to broadcast it. And that's something that always stuck with me, in the sense that what he was saying was that most of the time what you will find in the industry is that those people who are really the ones that are making the money, those people who are really the ones that have the magic ingredient, they are the ones that would never ever tell you what it is that they do. Or if they do give you an insight, it's a very holistic, very high level. They are not going to give you the full leg inside measurement. And that always stuck with me, because what he was saying was that, if you broadcast everything that you do, then ultimately, if what you're doing is very successful, and then you've got another 1,000, another 5, another 10,000 people trying to do the same thing every day, trying to get in the same trades, trying to get on into the same games, trying to get into the same price movements, eventually what happens is that it erodes your edge. Yeah. And it's something that really stuck with me. And so that's why, for me, I mean, when I did my project in 2018 last year, I was actually revealing all the trades. And what happened was there were people that were trying to by looking at what the games were in the markets, they were kind of trying to reverse engineer how I did things, um, and um, and which was fine. I mean, it wasn't a problem for me. But then I would get questions like, "Well, Mel, why didn't you trade? Why did you trade that game and not this game?" And for me to answer that, I would then need to reveal what my core selection criteria is, which is quite a key part of my edge. And so I kind of felt that for this project, the 90,000 project, that my approach will be different. And by not revealing which games I'm getting involved in, it will force people to focus more on the principles rather than my methodology. Because my methodology is my methodology. I mean, in terms of my methodology, it's about late goals. Yes, I mean, that's not something that I invented. I mean, late goals has been around as long as your grandmother. But it's the approach. It's a very, very particular approach I have, which has generated success for me. And I've always tried to toy with it and adapt it and make some modifications. Always trying to see if I can shave off, add more to the win rate. But ultimately, I'm in a happy place in terms of where it is, and I've never ever fully revealed everything to people that I may liaise with. I mean, I may give them a lot of insights, but there will always be, the golden pills that I'm holding back, because those are very precious to me. And at the end of the day, it's something that I've earned through pain and experience. And so I've got a right to hold on to what I want and to give what I want. So the other thing as well, which you've got to bear in mind, is that my strategy covers markets where liquidity isn't necessarily always that strong. Yeah. So when you're dealing with particular matches, say like Lithuania or Latvia or Macau, Philippines, Norway Division 4, Finland Division 4, if you're dealing in markets like Iceland Division 3, Iceland Division 4, what you will find obviously is that those exotic markets, that the level of money in the market isn't going to be that great. So liquidity isn't going to be good. So what it means is that can you now imagine being in those markets and then have another 5,000 people that are trying to trade the same game as you and the same price points as you? I mean, it would completely destroy any edge I have in the market. So because my edge, what a big component of my edge is reward to risk. So and my reward to risk is always measured by going in at particular price points and knowing that for 85% of the time the price points that I need are going to come at the time interval that I need. And so if you've got a lot of people going in because they've gotten wind of exactly what you're doing, it can really make price go up or down in a way which makes it completely uncompetitive. And so that's again a big factor in why I can't really sort of reveal the true inner sense of what I'm doing, because ultimately it would actually come back and slap me in the face. And that probably explains why I'm not really selling anything. I've never had the intention of selling anything in terms of courses or training, because ultimately I think it would be I just don't think if I was to do a course or training, I don't think I could really have the state of mind to do it knowing that I'm actually holding a lot of stuff back. And I know that's what other people do. I mean, I was actually on a course 3 years ago. I believe it was called Football Hedging. And I remember when I joined the course, it was kind of out of desperation, because I had come to a stumbling block in terms of my trading journey. And then what you tend to do sometimes through sheer frustration is just join up with somebody that's offering a course and there's, you know, it's got some really good marketing behind it. And I remember I joined the course and it was promising this and promising that, and I joined it. It was a course where you know, you had to pay like, I think like £100 or £200 up front, and then pay an ongoing retainer each month of £150. And I joined it just hoping that, you know, the guy would just give all the information and I could just get cracking with it, and, you know, within a month be earning the sort of money that he promised. And over a period of months, it then became apparent that he was kind of drip feeding the information into the course. So he wasn't fully revealing everything, and you literally had to be with him for, I believe it was like 16 months before you got the full. And even then, you know, I'm not sure whether every bit of information that was needed, he would have provided it. But I remember it really, really got me annoyed, and it wasn't because I was that sort of, because you get, you know, those people that are just the notorious refunders that will just, as soon as they get all the, if you did provide all the information, as soon as they get it, they just ask for a refund or they cancel the subscription, and so they've got everything for £100. I wasn't like that. For me, you know, if it was a 16-month term subscription, then I would stick with it, because I knew at some point, even if I've got all the information, there's still going to be parts in the journey where I'm going to require his expertise, his clarification, and there may even be sort of idiosyncrasies that I need to be aware of. But yeah, just coming back to, so for me, I'm not into selling my experiences in the form of courses or training, because I knew if I was going to do a course or training, I wouldn't feel coherent unless I knew that I was actually going to reveal everything. And because I don't want to reveal everything, it just means that there's no point me doing courses or training, especially stuff that I'm selling, because a lot of what I'm talking about is stuff that you can get off the internet anyway. It's just that I'm packaging it in a way which might be more you know, coherent for you in terms of your journey. And the last point is that success in trading is very personal. And one of the guys who closely kind of shadowed me over the last year, I think it was about 2 months ago, he just came to a decision where he said, Mel, you know, I've followed you as much as I can in terms of what you do, but I'm going to just go and do my own thing now, because it just doesn't work. I've had ups and downs, but, you know, and that's fine. That's absolutely fine. And I think probably that's what happens generally when you're trying to trade an edge or a methodology that isn't something that you found yourself. An analogy that I can give you is I like boxing quite a lot, and one of the fights I watched a month ago was Deontay Wilder in America when he fought Dominic Breazeale. Now, Dominic Breazeale traditionally has always been a guy that's easy to hit. I think Anthony Joshua also beat him a couple of years ago, but he's very easy to hit. He's got a very porous defense, and whilst he can bang, he does leave himself open. And if you watch the history of his fights, you always know that he's going to get hit at some point. He's got a lot of heart, but tactically and technically not great. Now, what happened was, leading up to his fight with Wilder, he took on a particular American trainer. I can't remember his name. Gil Hunter. I think it's Gil Hunter. And Gil Hunter is a trainer who's renowned, accolades. He trained Andre Ward, who went on to be a Hall of Fame great. So he took on Gil Hunter in February or March for Gil Hunter to train him. And what was quite interesting was a lot of the boxing experts were basically saying that that is not enough time for Dominic Breazeale to be able to change the way that he's always fought. Because obviously Gil Hunter has traditionally always been a guy that's very good in terms of advice and guidance about defense and you know, having a very strong defense. But what happened in the fight? Well, Well, Dominic Brazil got knocked out in round one, and how he got knocked out was the same as how he's always been in trouble in the past in terms of, and that was actually quite a good example of how when you're trying to incorporate something that is not part of your DNA, when you come under trauma or stress, you will simply revert back to type. So you will throw out whatever it was that kind of over sugar-coated the way that you really are. That will basically get thrown away and you will revert back to type. And I think sometimes in trading that's what happens, where we take on something which isn't really something that was birthed within us. And when the going's good, we're happy. But when the going gets tough, it kind of strips us bare and we kind of like, whereas with myself, because the way I approach late goals has always, this is especially the way that I do it, has always been something that originated with me. When I've gone through the valleys and I've gone through the real difficult times, something inside me keeps me sticking with it, because it's almost like that's what I birthed for myself, and how can I walk away from it, and am I really going to now spend another 4 to 5 years looking for something else or trying to find something else? And so I say success in trading is very personal, because even the way we do our analysis is a reflection of our brain patterns and how we approach problem solving. And so, and then the thing about how I trade, it's just evolving, because as I amass more and more data and I do more and more data warehousing, I'm able to see more and more consistent themes in terms of where I should be looking. And so if I gave somebody my strategy from day one, I'd have to keep coming back to them after day 45, day 90, day 150, saying, okay, I've updated this. No, you should no longer be doing that, because now this is the way I'm doing it. I can't be bothered with that. I'm not going to be a support role like that. My whole reason for going into this was to actually create less stress rather than increase my workload. So hopefully that kind of answers those questions. And then the other thing that I wanted to mention is the reason why I don't sell is because my focus is not on selling courses, but ultimately my long-term objective is basically to orchestrate or create private equity projects. Now, this isn't, when I say private equity projects, I'm talking about investors who are looking to invest their money in alternative investment schemes where I can trade their money and make profit. Now, this isn't about sending money to Mel or here is my bank account, just send me the money and I'll do it. This is about a very meticulous approach where I've got very reputable accounting and legal firms that are managing the process with all of the various safeguards and legals and compliance factors in place, so that when people see my track record over time and have an interest, I can simply point them in the direction of the consulting or the accounting or the legal firm that takes responsibility for getting people involved, doing the contracts with them, and all I do is simply trade the money that's on account, and then the accounting firm does the splitting of the profit sharing. So that's ultimately the objective, and that's why that's really my long-term objective, because there are a lot of high net worth investors that are now looking at sports as a new sort of asset class, and that's why there's a lot more activity in terms of hedge funds that are now looking at sports as an alternative asset class for investments, as opposed to traditional asset classes such as forex or equities or commodities or cryptocurrencies. They see that sports is a growing opportunity, and so I know that over the next 2 or 3 years, as the financial trading world gets more educated about what's going on within sports trading, that is going to generate more of a buzz and more of an interest. And so So there is, there is actually, because people are saying, why are you doing this for free, and why are you, even if you're not, providing all of your insights, why are you still doing this? How does it benefit you? Well, it benefits me because I know that by doing this over a consistent period of time, eventually there will be people that are, as I know that there's people already on my Twitter account and on my YouTube following. I know that there's people there that are investors, and they're just listening to everything I'm saying. They'll patiently just not saying anything. They're watching how things go. I know you're there. So for me, what I'm trying to do is just generate a level of continuity, a level of consistency, and a level of profitability, which actually proves that I practice what I preach. And, in order, when it comes to private equity trading, in terms of setting up private equity accounts and trading people's money, the confidence that they have in you is only going to come from a long track record. You can't say, I've only been trading 6 months and here's the results. They want to see, 1-2 years worth of managed accounts to see the proof in the pudding. So that's basically why there's no need for me to sell courses or anything like that, because my long-term focus is on something a lot bigger than that. So hopefully that explains. So there are some revisions that I've made. My critical success factors have actually slightly changed. At the beginning of March, I was kind of more looking at reward to risk ratios of 3-to-1, and I've actually kind of modified it to go more for 2-to-1, because in March, complicated by the fact that there was internationals, complicated by the fact that I no longer was utilizing access to Bet365, and complicated by the fact that I was working with a 3-to-1 reward to risk ratio, it meant that the opportunities were very limited. And when the opportunities are very limited, it's painful when you miss a trade because you've gone to the toilet, or because something's happened where you can't be at your computer at the time that you need to make trade entry. And so I just felt that I'm more comfortable with the 1.8 2-to-1 reward to risk ratio range, and it just gives me a lot more. It actually helps me to achieve more of what I'm looking for in terms of hitting, 25 to 35 trades per week. And as a result of that, it means that my win rate goes up, because I think with the 3-to-1 it was more around 43-45%. Right now it's sort of bouncing between 55 to 60. It was 50 when I was doing 2-to-1. It was, especially last year, it was sort of around 50, between 50 to 55, but right now it's 55 to 60, because of particular enhancements I've done, because I actually went back to a file from 20, would you believe it? It was 20, I think it was 2016. And I was looking at it and I couldn't believe. And then in the end, it was only after about 3 weeks, I managed to piecemeal what the decision-making process was, which led to why the win rate for a 2-to-1 approach was sort of more the high 50s. And that's why I was saying earlier about having a good track record, having good notes, good documentation, because it is a pain in the backside when you've got to go back, see something that actually works better than what you're doing now, but you're not able to replicate that because you've completely forgotten what the rules were behind your decision making then. So number of occurrences, I'm still looking for around 130 trades a month. My bank size that I'm working with right now is 12,000, because I took a bit out, because obviously I wasn't doing a lot of heavy trading in April and May, because I was obviously going through the whole process of setting up my Molybet platform, and also doing a bit of fine tuning as well. and my trading size is going to be 1.5%. And the only reason why I've gone from 1 to 1.5 is because the win rate has gone up. So my win rate has an influence in terms of what my percentage based risk is. I think when my win rate was 43% going into the beginning of the project, because I was looking at 3 to 1 reward to risk ratios, and obviously the higher your reward to risk is, the lower the win rate. That's just how the systems work. But I was working with 1%, because if you're working with a 43% system, then you're a lot more susceptible to some really harsh losing streaks, like possibly 10, 12, even 15 losses in a row. So by trading smaller, it helps to offset losing a big part of your bank when you're going through those drawdowns. But because the win rate's actually gone up now, because my reward to risk has come down slightly, I can afford to be a bit more aggressive in my trading risk-based approach, which is now 1.5% of my bank. So that kind of explains everything. So I hope this has been quite useful for you to understand this part of my journey. And it was important for me to have the humbleness to recognize that I wasn't really fully happy, and that there was no point just trading on and trading on, because you've really got to be in terms of your confidence and also your attitude. There has to be such a resonance between your conscious, your subconscious, your whole being in terms of what you're doing. And if you've got particular things that are gnawing at the back of your mind, your trading results will bring that to light. So it's best you address it, then move on, as opposed to carrying on and letting it sort of become more of a bigger issue. So I felt that I needed to be humble enough to accept the fact that I'd made a mistake at the beginning by excluding 365, and recognize that I needed to bring it back into the portfolio, but also understand that that itself possibly is only a short-term solution, because of the fact that I needed to factor in that there's a risk there as well of being limited, so having something else in place. And that's why now going into June, a lot more confident. One of the things I also wanted to say is, in terms of me trading a lot of the more exotic leagues, in fact, let me just show you right now which leagues, just one moment. Yeah, what I wanted to show you was, where is it? Summer. Yeah, so basically, this is no secret. This is information you can get, so it's cool. These are the leagues that I'm operating in at this moment in time, and this just kind of gives you a sense of why you can't depend on Betfair alone. So Armenia, Bolivia, Brazil. Brazil I don't normally do, but at one point the first division had reached a respectable output of goals, but it's dropped back to its historical position. Canada, Chile, China, Colombia, Denmark, Ecuador, Estonia, Finland, Iceland, Indonesia, Ireland, Latvia, Lithuania, Malaysia, Norway, Paraguay, Peru, Philippines, Singapore, South Korea, Sweden, Thailand, USA, Uruguay, Uzbekistan, Vietnam, Venezuela. So these are the types of it kind of just gives you an idea as to leagues that I operate in. Now, I do want to give credit where credit's due. One of the reasons why I now trade in all of them without any hesitation is mainly because of one of the guys who was in quite close contact with me over the last 9 months. Because I remember last year, he kind of showed me what he was doing, and I couldn't believe some of the leagues he was going into. And I remember just thinking, this guy is he's ruthless. There's no league that's spared from him if he believes that there's big opportunities. And it kind of made me rethink my whole approach, because you kind of train to think that it should only be the Premiership or the Spanish or the German or the French or the well-established leagues and that. If you try and go into the more minnow leagues, that it's not as good, and it's just a lot of BS, because at the end of the day, football is football, and the principles and the psychology behind how teams react, how teams play based on their stats, it's consistent, and you can't make exclusions and say, well, especially if you find something that's quite an edge that is, I mean, obviously you're going to have idiosyncrasies where there's going to be some leagues that are more attacking and other leagues that are more defensive. But what I'm saying is that if you have a strategy which is focused on defensive leagues, you can't say, well, yeah, it works with French League Division 2 or Spanish League Division 2, but it's not going to work with a defensive league that's from a minnow country, because to me the consistencies are just going to always be there. And so what it's helped me to do is have less of a discrimination when it comes to leagues. So if a league, when I do my assessment's not just based on the teams, but it's based on the league, the history of the league, and if I believe there's a good fit, then I'm going to go into it. I'm not going to make any discrimination because of the fact that it's not an established league. And I think that's what helps me in terms of generating the output of trades that I need. And it also helps me when I'm going through, it will help me when I'm going through the international breaks, because those minnow leagues will come to the forefront. And it helps me now because whereas, other people, I see them saying, well, now's the time to kind of forget football and going to tennis or going to cricket, I can consistently stay with football. Nothing's changed, because at the end of the day, I've still got access. And that's why the importance of not depending on Betfair is paramount in terms of what I do. The other point I wanted to make is another question that came back was in terms of what I do, is it technically trading, or is it betting or value betting? I would say you could probably classify it as value betting, but not value betting in the sense of how I see value betting with other people, where they say, well, the price should have been 1.50, but it's actually at 1.57. So we see it as a value bet because the price is slightly overpriced from what it should be. That's not what I'm talking about. I couldn't care less or more about that sort of stuff. What I'm talking about is where price, where the market is reacting strongly because of something, whether it could be the fact that time is running out. So the market is starting to react, and so the price starts to tumble, or it starts to accelerate based on which side of whether you're buying or whether you're selling. And so because price is falling, you're able to go in and really put down significant liability because of the fact that, well, if you win, your reward is going to be so much more than your risk. Yeah? And that's why for me it's important that I'm adopting an approach where my reward is, at least twice or 3 times bigger than my risk. I mean, right now I'm settling at 1.8 to 2 times bigger, but you really see the power and the potency and the impact of it, positive impact of it over many trades, as opposed to dealing with lower reward to risk ratios. Now, if you're somebody that deals with a 1-to-1 or even less than a 1-to-1, it can still work. I mean, I've kind of moved away from thinking that you've always got to trade high reward to risk ratios. I think ultimately at the end of the day, you've just got to do what works best for you. And if you found something that works for you, even if it means that your reward is half the time, is less than your risk. So, you're putting on £100 to make 50. But if it works for you because somehow the win rate still bears you out, then and you're happy with that, and you know that if you tried to adopt the way that I did it, it wouldn't work, then to me, at the end of the day, you have to stick with what works, what's congruent with you as a person. And I'm starting to more and more realize how trading is very, very personal, very individual. It's a reflection of you as an individual. And so that's why it's so important that you've really got to do what resonates with you, as opposed to trying to take on something that works for somebody else. because it may not work for you. Because even though the methodology might make sense, when it comes to implementing it, your psychology, your whole framework of thinking and dealing with risk and dealing with problem solving might completely combust, because you're just not able to adequately deal with it the same way that the person you saw it work for deal with it themselves. So it's very, very individual. Now, the reason that I say, the reason why, and a lot of the times I don't need to close trades. So when I put my order into the market, I don't need to close it. And the reason I don't need to close it is because I'm dealing with very low price. I'm dealing with such a high reward to risk anyway. Because my reward to risk is already predefined. I already know that when I get into the market, I already know what happens if it doesn't work out. And I think this whole thing about, trading is better because you're closing, I think it's just a real misnomer, because it hasn't been properly contextualized. So as an example, if you're laying the draw at the beginning of a match, now at the beginning of a match, a draw on average will normally be priced around 4, yeah? It would be priced around 4. So if you, let's say you risk, if say like you wanted to earn £100 on a lay the draw strategy, and the lay the draw price starts at 4. Well, typically what happens is, to make £100, you would, I think, have to put on, correct me if I'm wrong, you would have to put on £300 worth of liability. Yeah. Now, what tends to happen is, if the game is still a draw and it's got to 60 minutes, what you tend to find is that around that 60 to 65th minute, your liability has reached £100. Yeah, because obviously the liability would start going into the red from the time the match starts, and if it's still a draw by the time it hits 60 to 65, then your liability is obviously increasing. So by the time you hit 60 to 65 minutes, then your liability is £100. So you've got to then make a decision as to, if you close the trade, then you're going to lose £100. Yeah. But if you let the trade run to the end of the match and it still ends up a draw, then you would end up losing £300. So in those types of situations, it's absolutely clear that you commit suicide if you don't close your trade at a particular point to limit your liability. Yeah. And even then, when you're dealing with later draw, if you're looking to risk initially 300 to make 100, there's no guarantee that you're going to make 100 anyway, because sometimes when a goal is scored, the price may not rise as much as you want, and it may take a side going 2 goals ahead before you manage to get all of the profit that you wanted to make. So, but the point being this, is that in certain situations, yes, closing the trade is absolutely necessary in order to protect your bank. But when you're dealing with low liability, so for instance, if I'm going in if I'm laying a game where the over-under markets, or even a draw, if the game is a draw and the price has gone down to like 1.5, and I'm laying £100 to make 200, because if you're laying at 1.5, then if you lose, then you lose. Okay, let me just start again. Yeah, if I'm going to lose £100 based on laying at 1.5 with price coming down on the draw, and I'm happy to lose £100, then what it means is that I would be putting on £200, knowing that £200 is what I'm going to earn if the price goes in my favour most of the time, or lose £100 if I leave it till the end of expiry. So in that situation, there's no point closing the trade. There's no point closing the trade. So if the price is at 1.5 and it goes to 1.2, 1.1, there's no point closing it, because there's always still a chance that a goal could be scored anyway in the 91st, 92nd, 93rd minute. There's no point closing it, because at the end of the day, if you just let it run, your liability at the end of the day is going to be half of your reward, or your potential reward. So this whole thing about closing the trade, I think sometimes it needs to be contextualized. It's not that opening and closing a trade is going to make you more money than somebody who just leaves it open, who would be considered to be a value better. It all comes down to what is your reward to risk, what is your win rate, what is the number of occurrences you're able to generate with your methodology, and what is your positive expectancy. And once those statistics are congruent, then it doesn't matter whether you're trading or value betting, because at the end of the day, the principle is still the same, in that you're looking for a particular market move to validate what you hope to happen. And that's ultimately what it comes down to. Okay, so I end part 3 just by saying that now that I'm back in full motion, I will be doing daily updates in Twitter, and also in terms of my equity curve, which you'll be able to access from my website. And then I'll do a monthly validation, and that monthly validation, all it means is that because obviously what I'm showing you are the totals, the total P&L from each day, but what I'll do is I'll do a video once a month going into my 365 and going into my Betfair platform and doing a total P&L for the whole month, and it should equate to each of the individual daily P&Ls that I've been putting up in Twitter. So at least there's consistency. If there's no consistency, then there's something wrong, which means either I've made a mistake. But the whole purpose behind that is really just to add another layer of proof that the results are real. Because when you're actually logging into the platform, I mean, Betfair doesn't do a demo platform, and neither does Bet365. So when you're logging in, you're logging into the live environment. So whatever report you generate is actually going to be based on real live performance. I'll continue to do bi-weekly podcast updates. So the bi-weekly podcast updates will just be based on particular things that I'm seeing. It might be to do with what I'm experiencing in my journey, or it could just be a particular theme or subject matter that I want to deal with. And then what I'm also going to do is monthly Q&A webinars. So these are going to be live webinars where you can actually log in into a web conference, and you can post questions and I'll try and address them. Not because I'm setting myself up as an expert of the subject matter, but more just to be able to pull down from my own experiences and share with you how I may have dealt with or addressed particular things that you might be experiencing, or you might have particular questions about what I'm doing, which I'm always happy to answer. Even though I said that I may not necessarily share the full inside leg measurement, it doesn't mean that it doesn't stop me from being able to go as far as I can in answering particular questions that you have, where I think, my answers might be quite helpful. So there we go. So as I said, watch along, and as I said, I'm very confident of where I am. I'm very confident of the project. Whether I hit 90,000 by the end of September remains to be seen, but I'll give it a good shot. And hopefully this will be inspiration to some of you out there who are doing your own stuff and are probably just looking for a bit of motivation by somebody that's willing and not scared to show their results, because at least it can help to affirm what you're doing, or maybe experiences that you're going through. You see I'm going through them and you can think, well, I see how Mel's dealing with it, so this is how I'll deal with it. All right, till next time. Bye-bye.